Hey, it's Mike Hambright with FlipNerd.com. Welcome back for another exciting flip show. Today I have with me a good friend of mine, Greg Rand. He's the CEO of Own America, and Greg is a leading force behind making residential real estate an asset class that institutions, families, even individuals can invest in by helping aggregate packages of single-family homes. It's a really interesting space right now. We're going to learn a lot more about it. Before we get started with Greg, though, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Greg. Thanks for being on the show.
Thank you very much. Good to be here.
Yeah. Good to see you again. So you're in a really interesting space. Obviously, you're treading new ground in a lot of ways. And for those that don't know you, I've met you a few years ago at a Homevestors event. I read your book a few years ago.
Oh, good.
And I've always been intrigued by what you're doing. And in fact, what we were just talking about, what you've been doing over the last few years has even changed dramatically. But for those that don't know you, tell us a little bit about your background and kind of what you're doing now and how you got there.
Sure. Well, thanks for having me. It's
Sure.
an honor. My background is that I spent my entire adult life and part of my childhood in the residential real estate business. Anybody who's an SOB, son of broker, knows what I mean by that. You know, taking pictures and putting in signs and answering phones in a real estate office when I was 11 years old. 25 years ago, got into the brokerage and technology part of the business and have always had a belief that it was an asset class that it just really wasn't fully understood and wasn't fully represented. I consider myself an entrepreneur in the real estate space. I've done a lot of things and I love it. And we're in a really interesting spot now with Own America. Launched it back in 2010 and we're firmly in the single family investment space now in a variety of ways.
Yeah, and you were kind of on the leading edge of, there's always been this disjoint between residential realtors and brokers and kind of the investment side. And the way that I've always put it is a lot of realtors and brokers historically have thought that, investors are slimy, but they all secretly want to be one. And a lot of real estate investors have viewed agents and brokers, in all honesty, as probably, if anything, a necessary evil on some level. And so there's been this kind of colliding of worlds over the last few years.
We call it a tale of two stereotypes.
Yeah.
The realtors have earned their stereotype for being not as serious of an industry as they should have been, given the import of what they do.
Yeah.
And we could talk an entire show about the reasons why that evolved. And an industry of investors that are bottom-feeding vultures, so to speak,
right,
that bought too many tapes on late-night cable. And the tale of two stereotypes in the middle someplace are great real estate entrepreneurs of all sizes and shapes that have a huge belief in the success of the United States and recognize the fact that single-family homes is a way to play the growth and success of towns and cities across the United States.
Yeah.
And there are a few realtors out there that know what they're doing. And so if you can match them up, then it's a good thing.
Yeah. I guess that's largely a fact that, most people have, up until recently, especially on the agent side and the brokerage side, have been very transactional, right? You're just kind of doing one transaction at a time, never really thinking about it from an asset class standpoint, which is what you're doing now. So talk a little bit about how you've kind of evolved and the opportunity that's kind of arisen that you're focused on now.
Yeah, that's great. It's been a really exciting ride for the last 4 years. I sold a residential real estate brokerage company, good-sized company, 1,000 agents up in the suburbs of New York, to start Own America back in 2010 because I was convinced on the other side of the housing crisis was going to be a massive investment boom, and there wasn't really an industry to enable that yet. And of course, over that period of time, we started out setting up a national network. We've got a national footprint. Every market in the country, we have boots on the ground that we've trained, certified real estate practitioners, brokers that is, with the technology and tools to represent their little piece of dirt as an asset class. And now we represent a variety of investors over the last couple of years, large ones that you've talked about and everyone's read about and probably interacted with, who have been aggregating massive portfolios of single-family homes strategically across the country. And now they're vindicated, and so is everybody else who's bought real estate and held it for a decent amount of time, that the prices are coming back, and there are a lot of people who want to take some money off the table for whatever their reasons are, and there are a lot of different reasons, and we're representing them. We're essentially a marketing and brokerage operation with a national footprint, servicing investors, focusing most heavily now on helping people that own property, that have packaged portfolios on packaging, positioning, and then marketing them to a broad global audience.
Yeah. So talk a little bit about, when you started a few years ago, you were essentially training agents
right.
To think more like an investor. Is that safe?
Well,
or
to recognize the fact that the stats show that a third of all the 25% to 30% of all the transactions every year of residential real estate are purchases and sales by investors, and yet realtors are obsessed with home ownership.
Right.
They define home ownership as owner-occupied home ownership, when every home that we as investors own, those are homes that are owned. That's home ownership too, right? It happens to be occupied by somebody else, but it's a business opportunity. So we knew that they weren't trained. It was a niche. We developed the certification and the technology tools to create that specialization in markets all around the country. And so we woke up one day and we had an army of people that knew what a yield was. Imagine that, right? And all parts of the country could actually measure the yield and analyze the return on investment on a property anywhere in the country. And so that army became our operation on the ground to service investors that would want to be anywhere.
Yeah. Yeah. And what's kind of evolved over the few years, certainly at the institutional level, is that this has become an asset class that is very much a Wall Street product, or can be at this point, right, which is very different. And what you're doing is kind of boiling that down to the folks that don't necessarily want to buy one house at a time, and that aren't buying packages of thousands. They're buying 10, 20 at a time. Is that right?
Well, that's true. I mean, what I'm all about is enabling more people to be able to benefit from owning U.S. housing, okay? Yeah. So I love, for example, that one of our clients that we acquire and fill their portfolio for is a publicly traded REIT. So people can buy single-family homes now by buying shares in American residential properties. That's a good thing, right? And some of the other public REITs. But now on the portfolio side, here's what we discovered. There are people, sure watching this show right now, who have built portfolios of 3 or 30 or maybe 300 homes, blood, sweat, and tears to fix them up, to lease them up, to have them perform, to squeeze as much blood from the stone as they could, to manage it efficiently. And so they've now got a performing, monetized portfolio. We call them stabilized portfolios. Now they want to liquidate. Where do they go? Commercial brokers have their nose in the air about houses, right? They won't touch it. Residential brokers are obsessed with home ownership, owner occupancy. And we think what the industry is tripping into, if it's not careful, is if you talk about a portfolio, people hear bulk sale. And when they hear bulk sale, they think discount. And when you're a seller, discount is an evil word, okay? You want to get a premium for your product when you're selling it. And so we're establishing stabilized portfolios for the buying public as something that is a very valuable premium product. It's a known investment. A lot of the risk has been taken out because it's occupied, it's renovated to a standard that's occupiable, and it's actually performing. You buy the portfolio, you get checks in the mail from renters the first month.
Right.
So we think that's a major leap forward, and the idea that if we have a client who has 100 units, we break it down into pieces of 12 and 24, because with the mortgage financing available now, you can have $250,000 and buy a portfolio of 12 houses, getting 70 or 75% financing. That also has never really been possible like it is today.
Until recently, yeah.
Yeah, so the barrier is down, and we're trying to enable more people, because I don't want to go to the stock market. To me, this is a beautiful thing. The people believe in housing. The entrepreneurs out there were struggling to find capital. Now there's capital, and we're trying to make it as easy as possible to get in and take positions.
Yeah. So talk a little bit about who is actually selling these. Is it really the guys like me that just want to sell my portfolio, or are some of the institutional folks trying to liquidate their
all the above. All the above. We've got we announced this 5 weeks ago that this was a new brokerage operation for us, and we launched it because after dealing in portfolios for a year, we realized how poorly they are packaged. There are people out there saying, hey, I'm selling my portfolio. Here's a spreadsheet, okay? No background documentation, no reconnaissance being done. We have sellers who are large institutions that bought 100 houses in a city and changed their mind. And so it's not worth keeping those 100, so they want to sell them. All the way down to an individual who's in his 60s, whose wife is saying, your heart's going to give out if you don't get out of this business. We want to go to Florida, sell the damn portfolio. Okay? Yeah. And he's saying, okay, I own 70 houses. Who do I go to list this? And he looked around, couldn't find anybody, found his way to us through referral. And so it's everything in between. It's people. This is a guy who bought back in the 80s. He's done really, 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 really well.
Right.
Other people bought 5 years ago have done well enough to pull some money off the table. It's a total diversity of strategies.
Yeah, yeah. And from a discount standpoint, talk about how important it is that those houses are, a lot of folks that are buying into REITs or buying into different funds, like there's some value in the fact that they know that they're not going to get hit with a bunch of maintenance issues and things like that. Now, the way that I buy houses, the worse the better. I prefer them in terrible shape, but we're kind of more on the hustle side. And so when I see a package of 70 houses, there's a lot of people that have packages like that they have significant deferred maintenance,
right?
Which I'm okay with because I factor that into the price that I'm willing to pay. But talk a little bit about, the level of disrepair or kind of preparedness that these packages generally need to be in.
That's a great question. And the truth is that we're selling portfolios as they are. There are some that we won't take on because they're vacant. Okay. But if something is occupied, there's a certain degree of, it's occupiable if it's occupied. Right. Our ethic is to show it for what it is. Okay. So every one of our portfolios is inspected. The units have inspections, engineer inspections in advance. So when a buyer is looking at our portfolios, part of the stabilization is the condition is adequate for occupancy and it is occupied, or at least, whichever ones are vacant are being turned over, but it's a largely occupied and performing portfolio. And from the condition standpoint, we do a video, full-blown interior-exterior video of every unit, and we have a third-party inspector inspect every unit. So at least and that's kind of the point. How stabilized it is can be up to interpretation, but how transparent it is what's important. Because otherwise, if I'm going to buy a tape, right, if I'm going to buy a portfolio of houses that's a discount bulk sale, I'm going to find out what I got when I got home. And it's almost like storage wars, like you buy a storage facility and you shine the flashlight in for 30 seconds and then you buy and you open up, find out what you got. We're not in that business. We're a no surprises approach. So if the condition's not good, the buyer knows it's not good. It's baked into their offer then.
Yep. And then so talk a little bit about who's buying these packages.
That's a good question. The first round of portfolios are who you'd expect. People that have raised capital, a lot of it, other people's money, Wall Street capital. We met a lot of people, put it this way, over the last couple of years that were drawn into the housing market because of what has happened since the housing crisis. The Blackstones and all the other founding fathers of institutional single family drew a lot of other people in, raised capital, and hit the ground in 2012. Okay, it's not the same situation as it was back in 2010, and they didn't have a plan of how to. They have $10 million. They're looking for a way to spend the $10 million, and showing them a package in Nashville of 8 houses they can take down in one shot is extremely attractive to them because they didn't have a strategy for acquisition.
Right.
Okay, so that's the majority of our buyers right now. Are people who raise the money, are looking for easy ways to get in. Lowest risk possible and have reasonable expectations on yield. They're not trying to buy something they're going to get value out of right away because of condition or distress. They want to be able to trade $1 for a yield, and that's what stabilized does for you.
Yeah.
But we're starting to see inklings of people, the high net worth people, who are looking for an alternative investment and believe in housing, but aren't going to get their hands that dirty. But this is different. There's a management team in place already, or a management company, not a team, a management company. Maintenance and preservation is already in place. And so it's kind of taken the barrier from all the way up to only halfway maybe for them because they still have to pay attention. And they're starting to show up. So we're still in the early stages. Our dream is to activate a lot of those individual entrepreneurs out there who have some capital, want to get some debt on it, and then want to go out and build themselves a nest egg.
Okay. So let's talk a little bit about your role at Own America in kind of aggregating these and facilitating this whole thing. So you've got a network of agents that you've trained
right,
to think like you and think like institutional buyers and sellers. Effectively, I assume they earn commissions by transactions just like an agent normally would.
right.
And talk a little bit about kind of your role in the business side of your company and kind of how you make money or why this makes sense for you.
Sure, yeah. We have a great spot in the market because we have the relationships with the investors and we have the marketing channels to reach investors with our portfolios. So that's one of the benefits of having a national footprint, right?
Yeah.
If I'm looking to spend $500 million on houses and I want to be all over the country, I can't get too deep into a conversation with somebody from Dallas who does Dallas, okay? They have to be able to have a larger footprint. So we can talk intelligently with a variety of different size investors who are thinking about the entire country, trying to figure out where they want to go and how they want to get there. And so our people on the ground, when we source the business, we source most of our own clients through our relationships. Our people on the ground help us service it. We share the commission, okay? Our people on the ground, now that we've kind of showed them the way, we have a webinar series with our agents called Don't Do As I Say, Do As I Do, which is we got tired of begging you guys to use these tools, so we went out and started using them, and we're selling thousands of houses a year. So now we know it works. Just do what we're doing. And they're starting to source sellers, regional sellers who have 25 to 250, 185 we listed this week, okay, in Florida.
Yeah.
Coming in from people that we have in the field. So it's a beautiful kind of relationship between human intelligence and boots on the ground down there, and then a national single point of contact up here with the marketing and the relationships to kind of tie it together.
Yeah, yeah. And I presume you're quickly probably realizing that the bottleneck is finding deals, right? There's probably more money available than deals. Is that safe to say?
It's true. But you know how we're handling that is that we've never really been about deals. We're about yield. And yield is actually pretty easy to find.
Yeah.
You know, one of the things that's evolving, and this is not going to be a perfect match for necessarily the audience that watches your show, but it helps them to understand what's out there.
Right.
There are a lot of investment categories that people are perfectly happy to make a 10% return on a dependable, predictable outcome, okay? That's a hell of a great investment. That's what single families do all day long, okay? Yeah. You're talking about I can go almost anywhere in the country and without breaking a sweat find a low of a 4% yield in Washington, D.C. suburbs or New York suburbs to a high of a 9, moving condition, don't break a sweat. And then when you add a couple of points of home price appreciation onto it, which you can almost everywhere, and sometimes you can add 3, 3.5, or 4 points of home price appreciation, now you've got an unlevered 10, unlevered 8. You put a little leverage on it, you're at 10 or 11 or 12. There are a lot of people that consider that to be just fine.
Yeah.
Okay? And so we don't really deal with folks who are looking for an 18 or 20 or 25% return because in our experience, realtors don't find that.
Right.
My network is made up of realtors. They don't find those kind of deals and then serve them up to somebody else, okay?
Right.
If they have those kind of deals, they serve them up to people that are close to them in their tight clientele, or if they have any sense in their head, they take it themselves.
Right.
You know, I know somebody wants to sell a house for 60% of its value. Why would I tell anybody that? Right? So to be a deal getter, you have to be somebody who actually knows how to find them yourself. We look at the marketplace at face value and then find investors who are satisfied with face value.
Yep.
Does that make sense?
Yeah, yeah. And so you guys are kind of helping put in place or establishing. So I know a lot of the turnkey folks, generally part of their model is that they are either property managing it themselves or they're partnered with somebody else that is managing in that market.
Right.
So is that something you mentioned that property management's already in place? I mean, you essentially are offering a connection there? Or?
Yeah, well, the portfolios that we list are currently being managed by somebody. And in 80% of the cases, it's being managed by a third party. In 20% of the cases, it's being managed by the owner.
Right.
In the case where it's a third party, they're all kinds of happy to keep that client. So
sure.
The last thing you want to hear as a property manager is that your client who has 100 houses under your management is going to sell it.
Right.
So property managers want to stay engaged in the process so they maintain the client after it transitions. And when we have, so 100% of the time there's management in place. In the case where the owner is the manager, we ask them to give us a transition period, 6 months, where you hang on to it and transition over to the new manager.
Yeah.
But it isn't that hard to find a competent property manager in most of the cities that we see the action in.
Yeah.
And they're eager for us to refer them and hook them into the business. So
Sure.
it's a key component, but it's not hard to put in place if needed.
Yeah, and I think that's getting better than ever with the likes of, some of the franchise models that are out there. At least you know more of what you're getting with property management in most major markets across the country at this point. So
yeah, and the mobile technology and the cloud collaboration, I mean, it is so much different than it was 5 years ago in terms of being able to be there in touch with your portfolio without physically being there.
Absolutely. So, what are your thoughts on? What you're doing, what the institutional players have been doing over the past few years, is really the first time that this market has changed significantly in forever, right? So it seems like one of the benefits for guys like me, individual investors that have been buying one property at a time, generally for a long time, is that a big part of the opportunity has always been how inefficient the market is.
Right.
And it's with technology and with all the stuff we just talked about, institutional players, it's becoming more and more efficient. It's nowhere close to efficient, but it's becoming more efficient. So talk a little bit about how you see that continuing to evolve in terms of whether the opportunity will still be available for the little guy, which is most of the market, right? I
think the little guy, I mean to cut you off, but
no.
The little guy, if the efficiency makes it tougher to find opportunities, that's funny because I hadn't thought of that. That for the person who's looking for the deals, having a more efficient process is actually maybe going to be a detriment. But the upside of that, the other side of that coin, is that what is now understood about the housing market is light years ahead of where it was just 5 years ago. Yeah. Right? The quality of institutional data, rental data, expense data. Like I know what the yields are in 75 cities in America at face value. And that's because we've gone and we've measured it. I'm not the only one who knows, but 5 years ago, nobody really had that kind of view in terms of having that. The analogy that I use is that they didn't build the internet so that you and I can buy a pair of sneakers online. Okay, they built it for much more important, larger purposes. But yet we can now buy sneakers online. Okay, right. So there are small investors that never would have had the resources to build what has been built by and for the big guys, but now it's available to everybody.
Right.
And so the efficiency now, you have to change your game. All right. That's what being an entrepreneur is all about. Change your game a little bit. And a great example of that is you couldn't get financing on a portfolio to do acquisitions in the past. You couldn't get good, solid. I mean, we're talking about 6.5, 6.25, 30-year amortization debt that is looking at the rent roll as the justification for it. You've got crowdfunding out there right now, which is taking on a whole new having a whole new influence on raising money for real estate opportunities. Yeah. So a couple of years ago, it was learn the courthouse steps, find the off-market deals, find the foreclosure flow coming through the agents, whatever. This situation evolves. Efficiency ultimately is good. And all those tools that have been developed now that are available to the small investor, I think are going to even put them ahead of the equation.
Yeah, I think, generally speaking, what I've seen is it has gotten harder to find deals now. I primarily operate in the Dallas market. Texas is just hot. It's probably as hard to buy deals here as anywhere. But when we get them, we're definitely selling them at premium prices than we were in the past.
Right.
Even the types of deals that we would wholesale or sell to somebody that's going to keep it as a rental, they're evaluating deals very differently to where they're willing to pay much more than a typical investor was even just a couple of years ago.
Right. And so there's the opportunity. Instead of buying that deep in, buying that much of a discount, you're now in a position to be able to find people who want a premium. That's what our role in this world is. We've created the first generation of marketing channels to reach a global audience of investors that have more modest expectations than you do in terms of return. Okay, you're an entrepreneur, you're making bigger returns. These are folks who are comparing what we're offering to a 2% bond someplace else.
Right.
Okay, or a Chinese investor who's wondering if their business is going to be nationalized and their money's going to be taken away. I mean, there's a lot of different strategies out there that we're pulling single family closer down the continuum to a stable, more modest return investment and finding just enormous amounts of capital out there that want those kinds of stable returns, and that where single family shines in the category of conservative long term, single family shines compared to other investment categories.
Yeah. And the types of returns that are being offered from the stabilized portfolios, how do they compare to multifamily? Because and the reason I ask is there's a lot of folks like, even myself, I've always done single family, but multifamily appeals to me because I can apply a bunch of capital at once.
Right.
I mean, buying houses one at a time, the way I do, is a hustle, and it's really never going to get that much easier. And so, when folks want to come in and apply large chunks of money, they tend to look at more commercial type properties.
Right.
But this is a way around that,
yes.
right?
That's the beauty of portfolios, right? The beauty of a stabilized portfolio is you are buying 24 units at a clip, and the way it compares to multifamily is that multifamily yields have been compressed because ever since the beginning of the housing crisis, everybody knew rental demand was at a peak. And how do you play a massive increase in rental demand? You buy multifamily, because then again, our industry had not yet been created. So you couldn't go out and buy clusters of single family that were leased. So you buy an occupied multifamily, which drives prices up, compresses cap rates, and so I think we compare very well, because one of the things that multifamily investors used to say is managing single family is impossible. You know, the houses are all over the place. It's impossible. Like, you know, there's a man on the moon, and yet we can't manage a bunch of front yards that are spread out. So that code has been cracked. People have proven that you can manage and maintain single family homes. You know, if they're geographically clustered, all the better. And that's who we're tapping. We're finding. You asked me who the buyers are. We're cultivating buyers who are saying, how many multifamily buildings are you negotiating for right now? You can't even find any product for sale because nothing's for sale. How about this portfolio single family? And they say, you know, no, I don't want to, but maybe I should think about this because it does make sense. The objections of another era don't apply anymore. Yeah,
and obviously one of the best benefits of a portfolio of single family houses is they're much easier to liquidate when it comes time to harvest them.
Exactly. Have a different exit. You can peel these things off. You want to make a tax payment, peel one of them off and sell it to whatever, send a kid to college. Right.
Awesome. Well, so where do you see things going with just generally with institutional players and the kind of the industry that you've really created here?
Well, I appreciate giving credit for creating the industry. I'll take a pass.
Well, Al Gore created the internet. You were just talking about the internet, so yeah, you might as well take credit for this.
Yeah. Well, you know what? We saw it coming early, and we took a nice position in it, and so it's a lot of fun and exciting. And where I see we've crossed over the point of no return. Okay, it isn't going back. It's now known and well measured that there are 15 million rental households and single family homes in America. That's the peak. The trough 30 years ago was 8.5% or 8.5 million. I mean, it's not a unique thing to the housing crisis. It just got a little bump from that. The microscope that Wall Street put on the housing market for these companies that have now gone public as REITs, so single family REITs, to the bond issues. There are now companies, several of them, that have offered bonds that are backed by rental streams. So instead of mortgage-backed securities, it's rental-backed securities. And they're selling well, and they're going to perform. Okay, they're going to perform. The beauty of it is that the Wall Street microscope is now on housing, and just like you and I would have predicted, they like what they see. Yeah. Right? It is single-family homes in America. People think this sounds like sort of fluffy. It's single-family homes in America. It's the shelter over the most stable part of our population, which is the families, okay, people with kids. Population is growing in America. This is not rocket science, okay? The demand is so built in and guaranteed to be growing that learning it, understanding it, you know, what was in my book, which is what motivates me and drives me in this, is that everyday people have an ability to understand. If you've got common sense, you can get the housing market. You understand more about it than you think. If you sent your kids to school in a school district, you know more about the fundamental drivers of growth and future prosperity in that community, rental demand, housing demand. You know so much. And now you can learn even more, that the more people that experience the wealth creation of housing versus everything else, the more capital is going to flow into it. In other words, our story is not a bunch of PR and fluff. Okay, our story is substantive, it's real. Not our story collectively, the housing market. Right. Like, why I didn't call this company Investorama, okay? We called it Own America, because that's the power of what it is that we're offering people, is that you learn your market, you have reason to believe the population will keep growing because it's a good place to live. You buy housing in there, rent it out, have it managed efficiently, and you hang on to it, it's going to create wealth. Sure. Yep. Awesome, Greg. Well, it's an exciting space. I appreciate your time today and sharing your insights. I appreciate it. It's great to be here. So for folks that want to learn more about Own America, whether they're interested in possibly buying or selling, where do they go? Just go to ownamerica.com. Okay. It's all right there. Easy enough. We'll have a link
down below the video here, but obviously ownamerica.com. So, Greg, thanks so much for your time today. Definitely appreciate it.
Appreciate it. Thank you.
Look forward to talking to you again soon.
Same here.
All right, bye-bye. Are you a member of flipnerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit flipnerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to flipnerd.com.